Welcome to the Lone Ranger Radio Show with Bruce Woodburn, CrossCountry Mortgage. Yes, that is me. I'm here handling all of your issues, questions, or concerns about what's happening in the real estate and finance market, at least in terms of finance when it comes to mortgages. What mortgages are the right mortgages to get right now? Which ones are the lowest possible rate? Is it better to go FHA or conventional? Is it better to use your VA if you're a veteran, or would it be better to go conventional? We're going to talk about all these things, including what's happening with interest rates, what's going on in the market, Trump trying to find all kinds of ways to combat affordability with 50-year mortgages, portability on mortgages. We're going to discuss all of this that has a lot to do with you. We've even heard word that they're going to get rid of property taxes for primary residences. I don't know how that's going to happen, and I don't know where the money's going to come from, but we're going to talk a little bit about that. I also want to talk about who should be looking to refinance right now. So let's be honest with each other. We were expecting to see lower rates than we have today prior to the Fed cut on October 29th. So everybody was expecting we would get a quarter point, but we were also expecting, and the market was expecting and made adjustments for, an additional quarter point cut on the December meeting on December 10th. Now, when Jerome Powell got up and did his meeting, he announced that the December cut was a foregone conclusion. They were very concerned about making that additional cut because of their concern of inflation. Now, inflation will definitely erode the bond market, meaning it's not good for interest rates. If we are high in inflation, we're going to be high in interest rates. That's what we saw during the entire Biden administration. Whether you liked him or hated him, it doesn't make any difference. We were experiencing inflation, and that was driving interest rates higher. The bond market just lost all of its energy. So now things are starting to look a little bit better. It's been relatively flat, but let's just put this in perspective. Interest rates today are about maybe 20 basis points or a quarter point higher than they were the day before the last Fed cut. Now, why would rates be worse when the Fed cuts the Fed rate? Does that make any sense to you? Well, here's where it makes sense. When the market built in a half a point reduction, it was already built in. The market makers said, hey, we're good with this. We're going to ride with it. We think that the Fed's going to do 2 Fed cuts. It's pretty well certain. There was a 97.5% chance on the quarter point cut that we got, and there was a 94% chance on the December cut. But when Powell met and Powell announced it was a foregone conclusion, we lost more than we gained. So interest rates went up. And as of earlier this week, the bond market was off by about 50 basis points. Well, 50 basis points would cost you about $500 more per $100,000. Now, as of Thursday, we started to improve again, and we had a nice improvement. Matter of fact, we've got what's called a bearish engulfing pattern on the bond market. And that means that Thursday totally engulfed the Wednesday number, and it was positive, and we could be on the road to some improved interest rates. How much? I don't know, but they're better today than they were on Monday. So I want you to get yourself prepared. If you've been sitting on the fence waiting to refinance, get your application made. Go to webringyouhome.com. Here's how we're going to do this. I'm not going to tell you I'm going to suggest that you refinance right now. I'm going to tell you that I will analyze your situation, but you will make application. You will send me your documents. I will only do a soft credit pull. We're not going to do a hard credit pull, so you have nothing to concern yourself with. I will analyze it, and I will tell you whether I think you should do it now or wait. Now, listen, 50%, I tell wait, 50%, I say do it now. And it just depends on your circumstance. It depends on your current interest rate. It all depends on how much risk aversity you may have. So if you have, if I can save you $200 a month on a refinance right now, you may say that's worth it or not worth it. Here is the way to determine whether it's worth it. If you cannot recoup the money it cost you to refinance, even though I'm adding it into your loan, you're not coming out of pocket with any money. But if that amount that I have to add to your existing loan is not equal to 36 months or less break even period, meaning your payment divided into the cost of that loan has to be 36 months or less. I prefer closer to 24. Okay. That's really a great number. You can get under 24, you should do it. You should do it right away. But I will not pressure anyone to do it or not to do it. But what you don't want to do is miss out on an opportunity. And here's what I mean by that. We expect things could go down, but we don't know that. We expected interest rates to be lower today than they are today. So if we had to make a prediction and you were waiting it out, you could have completely missed out on that opportunity. And you got to remember, $200 a month may be $80,000 over the life of the loan. $300 a month may be $150,000 over the life of the loan. That's not even considering the compounding interest on it. So don't be greedy. Don't be foolish. Let's look at it. The numbers read the tea leaves. Don't be emotional about it. The numbers read the tea leaves. If the numbers make sense, then maybe it's the opportunity to do it. But not all of you are going to get that message from me. And I'm going to tell you this much. You can call Rocket, you can call your credit union, you can call your bank, you can call anybody you want. They're going to tell you to do it right now. I'm not. I'm going to tell you the truth. So if that's what you're looking for, you want a straight shooter, give me a call. I'm not looking to sell you anything. I'm looking to help you win. Call me now in Orlando at 407-706-3313 or my Tampa office at 813-213-4009. Again, Orlando 407-706-3313 or Tampa Bay at 813-213-4009, serving not only the state of Florida, but all 50 states in this great nation of ours. And again, I'm here to help you win. Let's analyze it and determine whether it's the right thing to do. But I do need an application. I do need a soft credit pull. Then I can analyze it and I can give you real information. People that call in and say, I just want you to tell me whether I should do it or not and what's your rate. I can't do that. There's so many factors that go into an interest rate, your credit score, your loan to value, there's a lot, your debt ratio, all kinds of different factors. So let's come up with the truth. I'm not going to do anything to negatively affect you, and I'm certainly not going to give you a big sales pitch. So if you can count on that, if you feel comfortable with it, then you give me a call. If you're not ready or you don't think you're ready, that's fine. Let me know why you don't think you're ready, and let's determine what the plan's going to be. Now, let's switch gears for a minute and talk about folks that may be looking to purchase. Maybe you're renting right now. You're stuck in that vicious cycle of rent, and you don't see it being vicious, but here's what it is. You are paying 100% interest, meaning zero is going toward your principal. It's all going toward your landlord's principal. And I'm a landlord, so I thank you very much for that. But I do everything I can, even with my tenants, to help them become homeowners. Homeownership has made me a lot of money. Investing in real estate has made me a great deal of wealth. I am very grateful for that. I'm not the smartest guy in the room. I tell you, I'm a 10th grade dropout. I was orphaned at 15 years old. I'm not ever the smartest guy in the room, but I'm a pretty smart man. I've learned and I've studied the market and I watch the market day in and day out. I don't know too many lenders that understand and watch the market and understand the cycles, the fundamentals that go into determining what the potential of interest rate increasing or decreasing are. Now, that doesn't mean I have a crystal ball because I don't, but I can tell you one thing. You'll find very few loan officers that actually understand how the bond market works. And the bond market is what affects you and your interest rate. So if you're looking to buy, let's just start with first-time home buyers. You're renting right now. You're paying your landlord. Maybe you got a nice place. Maybe you got a bigger place than you could get if you were buying. That could happen. Don't let that get in your way. You have to get in the game. You can't get in the game and start at the top. You can't go, if I can't get a $500,000 house, then I'm not doing anything. You get in the game. Let's keep that home. Let's turn it into a rental property down the road, and we'll leapfrog into more properties. Let me help you build that wealth. I do it. I do it every day. I do it for me. I've helped many, many clients amass wealth in their real estate portfolio, but you got to have a little bit of guidance. Also, if you're looking to buy, don't pick your own real estate agent that you like or you think is nice or is your mother's best friend's bridge partner. Don't do it. You need a real estate agent that's going to fight for you. I will help you find the right real estate agent that I have pre-vetted through my program, meaning I have to have worked with them or I will not refer them. And once I refer them, they do not pay me a referral fee. Do you know that if you got a referral from one agent to another, they're going to pay one agent like 25 to 30% of that commission? They don't pay me anything for that. You know who they pay? I require that they pay you back. So when I refer you to a real estate agent, that agent will rebate you back up to 25% of their commission. It's a no-brainer, folks. And I instruct them how to negotiate additional closing costs on your behalf. I just had a client we got 6% in closing costs with. We closed them a couple weeks ago. They bought down the rate. It was incredible. Got all their closing costs paid. And man, they're happy as can be. So stop renting. Become a homeowner. It's the right thing to do. You don't want to be a tenant on the planet Earth. Don't you want to own a piece of the dirt that you live in? It makes sense, folks. Call me now at 813-213-4009 or go to webringyouhome.com and get your application started there. Again, soft pull only to get things started. Call me in Orlando at 407-706-3313. Why do I think buyers should buy right now? Here's why. Interest rates are much better than they were. Okay. They were in the sevens. Now they're in the low sixes. FHA, you can get in the fives. VA in the fives. So why would you wait? Well, you may say, I'm going to wait because I think interest rates are going to get a little bit better. Maybe they will. Let's talk about the negatives of a lower interest rate. So right now, buyers are in control. Buyers have more of an advantage when there's less buyers buying. Sellers have to get realistic about their price. So how do they do that? They'll either lower the price, make repairs, or pay closing costs, or a combination of all of them. Let's analyze what you need the most. Then, when rates drop, if they drop, all the people that wanted to buy then jump in. Now sellers go, wait a minute, I got 10 people that want my home. I'm not paying your closing costs. I'm not going to make those repairs. I'm not going to do anything for you because I got 10 people that want my home. But if you buy now, you don't have 10 people. You got 3 people out of 10 that want to buy. So you have less competition and more opportunity to negotiate. My name's Bruce Woodburn. I'm the Lone Ranger. I'm here to help you win. Call me now at 813-213-4009 or go to webringyouhome.com. That's webringyouhome.com. Get your application started right there. Orlando, 407-706-3313. We're here to help. If you're a move-up buyer, we call that the golden handcuffs because you've already got a home. Okay. You're sitting on a 3.5% fixed rate. You love the rate you have, but you really want a bigger home or a smaller home. Maybe you want to downsize, but you can't do it because you're just afraid of that interest rate. Let's examine whether you keeping that home might be the right thing to do and using it as a rental property. You just might be able to keep that and build wealth. So let's analyze that and see if you really need the equity out of that. And let's determine why you want to get into a new property so that we can help you get from one to another. Because our families expand, folks. We're growing. Things change in our life. And if you don't change with them, they're going to change for you. I'll be back in 5 minutes with more of the Lone Ranger Show. Bruce Woodburn, CrossCountry Mortgage, 407-706-3313 or 813-213-4009 or webringyouhome.com. Stay tuned. We'll be right back.